Hello and welcome. In this discussion, arranged by the experts at My Tax Accountant, we're going to dive into a really important topic, inheritance tax. Specifically, how you can use gifting to protect your legacy for your loved ones.
Now, I know it can sound complicated, but honestly, once you get the hang of the basic rules, it's actually pretty straightforward. So let's break it all down together.
This is the big question, isn't it? It's the whole reason we're here. So let's look at the key rules and, more importantly, the allowances that can help you pass on your wealth effectively.
Okay, let's just get the big number out of the way. The standard rate for inheritance tax is a whopping 40%. That's a huge slice of your estate above the tax-free limits. It's definitely a number that makes you want to plan ahead.
So, first things first, what does HMRC actually consider to be a gift? Because, their definition might be a little bit wider than what you think.
The official definition is incredibly broad. It's not just cash. It's pretty much anything that has value. And this is a really interesting one. It even counts if you sell something to someone for less than it's actually worth.
This applies to all sorts of things. The obvious ones are money and property. But it also includes stocks, shares, and even valuable items like antiques. That last point is crucial. For example, if you sell a house to your child for £100,000 less than its market value, HMRC considers that $100,000 difference to be a gift.
Now, everyone has a basic tax-free threshold. This is known as the nil rate band. Right now, it's £325,000. Generally, it's the value of your estate above this figure that could be subject to that 40% tax.
All right, now for the good part. There are several really useful allowances that let you make gifts completely tax-free. Let's go through them, because you can use these every single year.
This is your annual exemption. Every tax year, you can gift up to £3,000 total. And here's a great little tip. If you don't use it one year, you can carry it forward to the next. That means you could potentially give a gift of £6,000 in one go.
On top of that, you have your small gifts allowance. You can give as many gifts as you like of up to £250 per person, as long as that person hasn't received a gift from you using another allowance. This is perfect for things like birthday or Christmas presents to lots of different people.
And hey, weddings get their own special treatment. If someone's getting married or having a civil partnership, you can give them a tax-free gift on top of your other allowances. As you can see, the amount you can give depends on how closely related they are to you.
Now, this one is really powerful, but so many people don't know about it. If you make regular gifts out of your income, not your savings or capital, that's key, and it doesn't affect your own standard of living, those gifts can be immediately tax-exempt. Think of it as helping a child with their rent each month from your pension income.
Okay, we've covered the annual allowances. But what about those bigger, one-off gifts? Well, for that, you need to understand the most important concept in gifting, the 7-year rule.
Any large gift that isn't covered by an allowance is called a potentially exempt transfer, or a PET. The best way to think about it is that when you make the gift, you start a 7-year countdown clock. If you live for those full 7 years, the gift becomes 100% tax-free. It's completely outside of your estate.
So as you can see, the risk goes down over time. The first 3 years are the most critical. If you were to pass away in that window, the gift could be taxed at the full 40%. But after year 3, that's when things start to get interesting. This is something called taper relief. Basically, if you pass away between 3 and 7 years after making the gift, the tax rate on that gift gradually reduces on this sliding scale. The longer you live after making the gift, the smaller that potential tax bill gets.
So, knowing the rules is great, but avoiding the common mistakes people make is just as important. Let's talk about the biggest trap you need to be aware of.
This is a major one. It's called a gift with reservation of benefit. Basically, if you give something away but you continue to benefit from it, HMRC can just decide that it was never really a gift at all. They'll just add its value right back into your estate. Let's make this really clear. A safe, clean gift is giving your child some money for a house deposit. They own the house, they live in it, it's theirs. The trap is giving your house to your child, but then continuing to live there rent-free. If you're not paying a proper market rate rent, HMRC will say you're still benefiting, and the gift fails. And this is just vital advice. You have to keep good records. Your family, or whoever is executing your will need clear proof of when gifts were made to show they are exempt. Not having them can cause massive delays and real headaches down the line. Phew. Okay,
So how do we pull all of this information together into a simple, actionable plan? Let's quickly recap the main things you need to do. These 4 steps really are the foundation of a great gifting strategy. It boils down to this. Be proactive with your yearly allowances, keep good notes, plan those bigger gifts as early as you can, and make sure your gifts are genuine, with no strings attached.
And really, this brings us to the most important takeaway from all of this. While these are the general rules, everybody's personal and financial situation is different, and that's where professional advice is just invaluable.
For tailored advice that fits your specific situation, the team at My Tax Accountant are there to help. You can reach them on WhatsApp or by phone, and the number is 07854-255-375. Or you can email them at info@mytaxaccountant.co.uk. And for more clear financial guidance just like this, please do subscribe to their YouTube channel. Thanks so much for joining us.